let's get to the traders themselves and see what they're talking about today. David Lutz is on the Stifel Nicholas trading floor. Lou Breen is the trading strategist with DRW. And David Morgan is a commodities expert and author of the Morgan Report. Good to have all three of you with us. Let's start with you, David Lutz. Obviously, I mean, we did get this headline about the bomb, which we have, confirmed no one was injured. But it is interesting that the Greece situation continues to be in the headlines and very important, but yet the market just keeps going up.
Yeah, Aaron, I mean, I think the market has come to grips that the EU is going to do something about bailing out Greece. Germany's parliament came out and said there are ways around the treaty that they can do that. And all the attention seems to be shifting now towards Dubai, which is a big problem, but not nearly as big as Greece. We're watching Dubai World CDS jumping to the highest levels that they've been in 9 months. And chatter has it that a lot of the banks are going to be taking not only a 60% haircut, receiving only 60 cents on the dollar, but they're not going to be getting any kind of payment for 7 years and no interim coupon. That's a bigger haircut than they imagined. So that's got a lot of concern as far as Dubai World is. A lot of the credit metrics we're seeing CDS markets higher. We're seeing investment grade outperforming high yield right now. That's a trend that's been in place. That's jitters in the corporate credit market. That's not jitters in the sovereign market like Greece.
Well, it's interesting. We have seen a lot of selling of junk bonds, but Lou Breen, isn't it safe to say that Dubai and Greece are really just the tip of the iceberg? I mean, that there are many other situations like that to come.
Well, I think that what the EU did with Greece was kind of kick the can a little further down the road. I mean, that's what the United Arab Emirates are trying to do with Dubai. That's what the FASB regulation back a year or so ago did with the mortgage-backed securities here. What we're trying to do is delay the problems until maybe the economies get a little bit better and we're better able to handle them. But I think that there's a lot of things that have been kicked down the road. And as you said, they still loom in the marketplace. And as a result, I think that there's a lot of uncertainty how things will play out. I think uncertainty has been the key with the euro currency. And the correlation with the stocks has, for the most part, kept pressure on our stock market over the last month or so.
Well, I want to talk about sort of what to do right now. And David Morgan, that's where you come in. I mean, I'm just looking up here at my board, at the big board. We're up nearly $30 for gold. Very solidly above 1,000. Is that going to continue to be the trade?
I think it is. There's a lot of uncertainty in the market, as both of these people have indicated. And the market gives you a choice. And the choice is, do you want to take on more debt? Do you want to invest more in dollars? Do you want the euro? What currency de jure are you looking at? The volatility continues to increase, yet gold remains the currency of choice more and more. So I do think gold is the trade.
And what is your view on that, David Lutz? I know that you've also been looking at, well, China has, what did you say, 1.6% of its foreign currency reserves in gold. We know they'd like to have fewer dollars than they currently are stuck with. So is that an obvious transition?
Yeah, Aaron, absolutely. I mean, there's a lot of...
I'm sorry, David Lutz, I apologize. I need to use last names. Go ahead.
There's a lot of tailwinds to gold right now, as driven by China. We saw their tick flows showing they're buying less treasuries. They're diversifying into gold. Their Sovereign Wealth Fund came out with some data a week ago showing them starting to build a stake in the GLD. And also, the People's Bank of China has been encouraging the population since last year to be buying gold. And recently, we've had gold futures listed on the Shanghai Stock Exchange. That's going to make it a lot easier. The last main thing is CFTC data showed speculators having a net long position in gold, the lowest since last summer. That's a bullish contrarian symbol, Aaron.
And what's your view, Lou Breen, on what all of this means? I mean, we certainly weigh in on the gold side of it, but also in terms of the stock rally, you are not a believer in that.
Well, no, I think that that's a correlation with the euro on the day, and I think that as the euro comes under pressure in the weeks and months ahead, that the stocks will also come under pressure. But as far as the stocks go, they've done nothing particularly to the chart that damages them. I think a close in the S&P under 1030 would be the real first step in damaging that chart. But as far as the gold goes, I think that it is sort of a currency of choice. And even if the dollar was to rally, I think the gold probably gets hit less during that time than it would than some of the other commodity plays.
Lutz, what's your feeling from the trading floor in terms of the rally? Do you share the skepticism of the stock rally?
Aaron, You know, Aaron, we're seeing a lot of money coming into the banks right now, and whether that's short covering or real buying, it's hard for us to determine. I can tell you the volumes are pacing 15% lighter than Friday right now. We've got all our eyes right now on Bank of America. It finally got north of its 200-day moving average, and that's really what's helped this last little leg that we've seen. But you know what? The S&P is struggling with its 100-day at 1089. It needs to get upside of that. And I'm seeing some bellwethers like Amazon underperforming in the red. So clearly, we need to have some more volume for us to be feeling this is a sustainable rally at the moment.
All right, so David Morgan, what about the one other point that came up today earlier, which was copper and how copper prices have doubled over the past year? If you have a bullishness on gold, do you have a bullishness on other commodities as well, or no?
Absolutely. I think we're in a new transitionary phase that started many years ago where we're going to things that we need. The commodity sector obviously are things that we need, and I think it's going to continue. Certainly there's going to be bumps in the road, but I don't see China really having a big problem for probably a couple more years, although that's contrary to a lot of my peers.
All right, well, gentlemen, thanks very much. David Lutz, David Morgan, Lou Breen, we appreciate all of your taking the time. In spite of all the concerns out there, not just gold, which of course is higher, but stocks are still up triple digits, up 111 at this moment. Next